we quickly realized that people can't pay these back, especially when they have no skin in the game. When they didn't care about walking away from a signature versus walking away from $20,000 or $30,000 or $200,000 if you're buying that $1 million home. You had mentioned before that you came from a banking background back in '01, which was really the thick of it with all the subprime loans. What did you see back then as an underwriter?
Yeah, so it wasn't always like that. It wasn't always the Wild West. So what we refer to as the Wild West is when things started to get heated up. There was a lot of money in the system. There was a lot of desire and push to get home ownership up. So what happens is underwriting gets a little loose, gets a little crazy. Everyone starts to get loans that probably shouldn't be getting loans. And what happens there is that it pushes asset values up. So when you have a lot of liquidity in the system, it's going to push real estate values up. And ultimately, what happened was there was a downturn. There was a recession that was caused by real estate. And so the Wild West was teenagers, or maybe even just fresh out of school, no job, limited credit score, limited credit history, getting loans at 100% financing, sometimes 125% financing, on homes that were, seven figures, $1 million loans. It was a bit crazy. I'm happy to say that, there was a correction that fixed a lot of that. And ultimately, there were, things that, took place that, just like in any sort of, correction, there's a cleaning out process, and that whole process cleaned up the banking system. Where fast forward to today, you have really qualified borrowers getting loans that are appropriate for their capabilities in repayment. So I know that ultimately. Things are kind of like a pendulum, right?
Yes.
Things are going to, sway from one side, and it's probably a little extreme, and then it's going to go to the other side where credit was tight for a while, but it's starting to settle back in again, where things are pretty fair and normal.
Well, back in our parents' day, it used to be to buy a house, it was 20% down.
Right.
And you saved your money, you put your big down payment, and then you went and you got a home loan at your local corner bank. And in our generation, as we became adults, that was right at the beginning of, well, why put 20% down? Because that's only going to move your payment, a few $100 a month. Why don't we just go ahead and lend you 100% of that?